Hey, folks. Welcome to Sunday Night Stock Charts Live. This is Bob Desmond and another Sunday. I hope everybody had a great weekend. Thanks for being here. And I'm seeing Trader Isaac as usual, reminding me, everybody please smash that like button, please. It helps me with the YouTube algorithm. Nicholas has bashed me about the SQQQ. Okay, we'll talk about that. Rick Roofing. How's it going, Bob? God bless. To be a profitable trading week. I hope so. The channel rocks. Thank you very much for that. All right. Who else do we have here? Franklin. Good evening, Franklin. Okay. There was a little bit of confusion. For whatever reason, the video was set for 5:05 Eastern Standard Time. I don't know how that happened. I never set it for that time, and the futures aren't even open. Eric, hey, brother. You're very welcome. Okay. So, Norris is on. Hey, Norris. Okay, let's take a quick look at the futures action, and we'll talk about how we positioned ourselves going into the trading week. And you can see out of the gate, the S&P 500 is up about 1/3 of a percentage point. We're already slightly off the highs. And what I'm really going to be interested in is obviously the S&P 500. But as noted earlier, Nicholas jabbed me a bit, and that's cool. On Thursday evening, I laid out a plan. I was asked by fellow member Manoj, listen, what's the game plan here with the trip Qs? Suppose we're wrong. When do you think we need to lighten up on our short position of the trip Qs? And I said, you know what? Let's war game this right away and go over it. And I didn't think it would happen, but it did happen. This is the chart I drew. Okay. So this is the chart I used. And on that day, this was a bearish key reversal day. On Thursday, it looked as though we were putting in a lower high. And Intel had reported, you would figure, Intel, horrible forward-looking guidance, not bad earnings. 60% margins on their profits for last quarter. Forward-looking guidance, not looking good. Consistent with what we've been hearing. What happened on Friday afternoon? They rallied Intel up higher. What did they do the very same time that Intel reported earnings? And this is what I said that night. I said, I am concerned about the bag of tricks that they'll pull out to keep this market moving higher. What did they do? More stimulus. $480 billion of more money out the window that we don't have. So what happened the following day? Intel opened up down. I'll go to the chart. Opened up down, reversed to close up on the day. A big reversal day. And we lightened up. And I said, you know what? I was worried about the small caps breaking out, taking a leadership role. And with regard to the trip Qs, I said, if we break out above this upper band of resistance, let's think about lightening up. And I didn't think it would happen. I was concerned it would happen. I didn't think it would happen. Sure enough, what did they do? They rallied it. They broke it out on Friday afternoon. What did we do? We lightened up on our short position. Why? Here is why. Going into this coming week, we have earnings coming out from Google, Facebook, Microsoft, Apple, Amazon. And I got this from Tyler. What's his name? I forgot his last name. I love the guy too. Technical analyst on CNBC. I got this data from him. What we're about to talk about. I can't believe I forgot his last name. Only when I'm live. So we have all these names, the top 5 leaders of the S&P 500 reporting earnings the same week. This has only happened twice before. And it's happened the week of January the 26th, 2015. And it happened on the week of January 29th, 2018. The next 5 trading sessions, we were down 3.7% and 3.9%. So we're going to go to those charts and we're going to see what happened after in the subsequent weeks. Did we get a follow through to the downside? Did we regain that ground and move up higher? And we'll go over those charts in a moment. So here's the leadership group that was back in the dot-com crisis. Cisco, Microsoft, GE. Can you believe GE? Intel, Exxon, old tech, old economy. Now Apple, Microsoft, Amazon, Google, Facebook. So take a look at the price action on Intel Friday. They gapped it down. They closed it up. Big reversal bar. Take a look at it on a static chart. How do you fight this? How do you fight it? So, Intel closed up on the day, a very bullish day, reversed off the 50-period moving average, on volume no less. So what that implied to me, what that told me was be very, very careful about being too overly short. Not that we were. I even said it on Thursday night. I'm waiting for a break before we got very heavy to the short side on this market. And even with the limited position that we had on, I said, you know what? The setup for Monday does not look favorable for bulls because we have an inverted head and shoulders setup. Left shoulder, rounding head, right shoulder, and we closed strong. We broke out on Friday above not one resistance level, not 2 resistance levels, but 3 resistance levels. So we lightened up and we actually got long of a leveraged ETF, which is the small cap ETF. So we hedged the remainder of our short position, getting long of the small caps because I think they're going to try to squeeze the shorts as the large cap tech names report earnings. And we'll see, going back to that PowerPoint, we'll see how we did subsequently. I don't know why this keeps doing this. How we did after the earnings release. This has only happened twice. All this tech data coming out all this week, and it looks as though they're going to spike the markets higher up and into those earnings. And really, the 29th is the really big day. That's Apple, Microsoft, and then we have Amazon on the 30th. Let's segue through the futures action, and then we'll go to those charts, and we'll take a look at each individual name. Microsoft, Amazon, Netflix, Google, how are they setting up for this trading week? Facebook, they really rallied on Friday because of their announcement that they're releasing, or soon to be releasing, a Zoom-like product. And they ripped up higher big time, over 2.5% on Friday. It looks as though they're probably going higher. So we'll go to those charts, daily charts, in a moment. And we'll take a look at them on a weekly basis as well. Going back to the S&P 500, how are we doing here? We're now down. Wow. Wow. That was a quick reversal. Let's take a look at the small caps. Small caps are now down a third of a percentage point. Any news out there that just hit? Yeah. Any news that came up at all, folks? Wow. Well, we haven't broken support levels. It's still early. And I still think that they're going to rally the markets unless we have a news event that's out there that I don't know about yet. Let's take a look at crude prices. We'll go with the Brent price first. Then we'll go to light sweet. Brent is down just shy of a quarter percentage point. Light sweet down over 2.5%. Wise guy. Leave my president alone. Let's take a look at the dollar. The dollar is down slightly. Gold. Gold is up over a quarter percentage point. But it too is off the highs of the session. $15-minute chart. Yeah, gold had a rough day on Friday. I'm just absorbing all this right now. Let's take a look at copper. Copper is up. Let's segue back, taking a look at the E-minis. They've come back slightly. NASDAQ 100. Very interesting. Let's let this settle down. I can't imagine them letting this market drop in advance of those earnings. Unless they don't want to, meaning the big institutions don't want to remain long into those earnings. Silver is up nicely. Okay, let's go to the daily and weekly charts of the majors that are reporting this coming week. All right, so Intel we went over. Microsoft, a beautiful day on Friday, bullish key reversal bar. No new weekly high, and this is consistent. You know, we spoke about this on Thursday night that we had failed to see thus far that Thursday night a new weekly high, and we closed out the week, no new weekly high. And this is very much akin to a hanging man formation, meaning we rallied off the lows of the week, which is great. It's very bullish that we did that. However, they couldn't close it positive. They just couldn't make it happen. Facebook. So the daily chart is bullish on Microsoft, bearish on a weekly basis. Facebook, very bullish. Price action on a weekly basis. But their revenues are going to get creamed. Their ad revenues. Daily chart. Daily chart as well looks very bullish. Stokes are rising. RSI is rising. Great volume on Friday. Google. Let's go with the weekly first. Again, another hanging man formation. They rallied it off the lows of the week. They just couldn't close it positive. What else? Amazon. Now, Amazon, they did close positive last week. The problem with Amazon, and I'll point out something on a yearly basis. I know this is way out there, but I'll point it out on a yearly basis. RSI. We are leaning right into that third standard deviation Bollinger Band. And you go back in time, you rarely see this type of price action. You saw it back here earlier in the year, but that was a blow off top. That's when everybody was ignoring coronavirus, the CCP virus, I should say. And now we're back here yet again, if you could believe that. Great volume last week. Daily chart. And it looks as though they want to take it higher again this week. I will say, when you get filled candlesticks like this, it's a sign of indecision, but you have to side with the trend, and the trend is up. So in all probability, they're going to try to move Amazon up higher this coming week. We went over to Microsoft. Who am I missing here? Apple. All right, let's go to the weekly chart first. Weekly chart, bullish key reversal bar. No new weekly high. Daily chart. Broke out on Friday. Volume was very light. And that's very similar to what you saw on the Trip Qs. The Trip Qs had a beautiful day on Friday. You would think we're going to get a follow-through rally. We even broke out. But look at the volume. Volume was horrible on Friday. And on a weekly basis, no new high. Now, going back to the weeks where we had seen the top 5 mega cap names report earnings the same week, you go back to the week of January the 26th, 2015. And what were we down that week? We were down 3.7%. This week here, but there was no follow-through to the downside. Despite the fact that volume was above average. We had an inside week the next week, and then it was off to the races. Fast forward to the week of January the 29th, where we sold off, but we were overbought. We were trading above the prior week, the 2 standard deviation Bollinger Band in green, and we sold off. Now, this time around, I think that what we know is that we have no new weekly high. Volume on a daily basis is dropping off. And I think what we're needing here is to sell the news event. And I think that could be earnings. And I was expecting a rally into earnings. That's why I keep going back to the futures to see whether or not we're going to reverse here, or do we begin to sell off. Because that reversal off the highs of the session is a tell. And we're down below support at current. But this is a 30-minute chart. We have another 9 minutes to go before that's in the books. So let's go to some chart requests here. Bring up TrendSpider. And FL Boomer, Bob, thanks for your analysis. I am long gold, major minors, and juniors. Right, good call. I am looking at shorting the RMB through Yang. Yeah, we have a position in Yang. Does that give you exposure to the RMB? The RMB, that's the currency, folks. I'm not sure whether that's a pure play on short of the RMB. VTIQ, CGC. We'll take a look at the raindrop. I know Norris was out there. Can't forget Norris. XLE, GDXJ. Let me just jot these down. XLE, GDXJ. And I have one from fellow member Eric, Toronto stock. All right. All right. Let's get through these. Nat gas. All right. That's a good one to go over. Okay. Let's do this. Let's go to nat gas first because I'm curious about that. Let's take a look at it in the pre-markets. Oof. It's down. Well, it's up now. Not sure why it's showing down. It's up. Rough day on Friday, but it's bouncing back. We're at resistance. We'll take a look at it on a daily basis. Let's bring it up on... let's go to the UNG. Okay. Rough day on Friday. Let's take a look at it on a weekly view, that higher level view. Not a good week last week. We reversed off the highs. Early on in the week, it was very strong. But we had a reversal on the week, closing at the lows of the week. Let's go to my stored charts, see whether or not I have any interesting annotations that I've saved. Monthly view. All right, so I did this last week where on Stokes, we're in a trading range. We're trying to put in a higher low. We're trying to break out here. We're still in a downtrend. No breakout yet on a monthly basis. Volume so far this month, assuming that we close up, is pretty good. Now, what will bode well for nat gas is that with the frackers, many of the frackers coming offline, a byproduct of the frackers producing oil was natural gas. And that's one of the main reasons why natural gas has been so cheap. That's going away soon. So that's a pretty good catalyst for nat gas. Weekly chart, again, bearish reversal bar. They attempted to break it out. We were rejected. We can't think about getting long of nat gas until we close above, let's call it 13.25 on the UNG. Daily chart. Again, a bearish day. We close at the lows of the day. Maybe we'll put in a higher low here. Let's take our resistance level, update this. Actually, you know what? I want it right here. A real bullish breakout for the UNG would be a close above 14.44 per share. So while we're popping up right now, it could fade like it did last week. So right now, we're still technically in a downtrend. Trent, thank you. If you folks can hit that like button, I'd really appreciate it. I love when I get reminded. And J. Okay, let's move on. All right, XLE. Monthly view. An inside month. We're off the highs of the month. Unlike the S&P 500 last week, we were able to put in a new weekly high. The problem is we couldn't close there. So we're stalling out here a little bit. So it's best to take note of that. And here's your trading range. Between 30.89 to the downside and to the upside here, a breakout at around 34.20 per share. Daily chart. They tried to break it out last week, rejected. We're right at we're right at resistance right now, so I couldn't say buy the XLE, not yet anyway. I would need to wait for a breakout before we got long. I love the Stokes, looking good. RSI, looking good. But those are just indicators, right? We need price and volume to help support the trade, and we're not there quite yet. GDXJ. For disclosure purposes, we have a position in the GDXJ. Now, this is a monthly chart, and for anybody ignoring this chart, you do so at your own peril, because we have broken out, or we are in the process of breaking out on a monthly basis. The month is still not over. Perhaps we'll pull back and we'll close down within this trading range. However, if we close above this resistance level here, that's a significant breakout for the GDXJ. These are the junior miners. Now, what would I like to see next month, assuming that we break out on the junior miners? I'd like to see a pullback and a retest of support. That would validate that the breakout is alive and well. It's healthy. And that'll get technicians all sorts of excited. Now, I will warn, not to speak my book here. So we want to call it like we see it. Our stochastics are not moving in the right direction on a monthly basis. We have taken out prior lows here, but that takes into consideration the sell-off in February, March. Weekly chart. A beautiful rally off the lows. We're going to have resistance at or about $46 per share. And we closed out the week at 41.70, so certainly some upside potential here. We do have resistance levels beforehand. Right here. Actually, we closed right at resistance. It was resistance back here, and it was resistance last week. Interesting. Where is support? $39.49 per share. Daily chart. Yeah, you can see we were stopped right at that resistance level on Friday. RSI and Stokes are still rising, so we're still very, very bullish here. I'd really before we go adding more, I'd like to see how we close out the month. And then as we proceed into May, do we get that pullback and the retest of monthly support? And I can overlay here on a daily chart, monthly support levels, and there you have it. Here's the support that we're looking at for next month. I want to see a pullback and a retest of this red dashed line. That is monthly support on a daily chart. So we remain bullish on GDXJ. Hey, Denny. Hi, Bob. Question. If the market rolls over after earnings, aren't you afraid of the miners being dragged down with the stocks again? Yes, I am, to a certain extent. But if you go back, I wish I was prepared for this question. Let me see if I have the chart available. Here, you know what? Let's just make it up here. So we're going to overlay gold behind gold is appropriate. All right, so here was the financial crisis, and gold went down with the market, right? So no, undeniable. Or the gold miners. Here, let's bring up the GDX. That's more appropriate. A GDM. We'll use the gold mining index. We'll keep it gold. All right, so the miners went down along with the overall stock market, the S&P 500. However, they recovered before the S&P 500 did and began to rally well in advance of the S&P 500. And so to answer your question, am I concerned about a pullback? Yes, because they're stocks, right? I'm not as concerned about as severe a sell-off because back in February, early March, we didn't have an understanding of just how much stimulus there would be. We're doing $1 trillion a month of new stimulus. We had vast amounts of people on margin, and they had to sell what they could sell. They even sold gold, but gold held up fairly well. They sold silver off hard. We bought silver. We enjoyed that rally up. So to answer your question, yes, I'm concerned. No doubt about it. but not as concerned as I was. And that's why on a monthly basis, I want to see a pullback next month. Going back to that chart, let's bring up the monthly view. Here are our overlays. Here's the breakout. I want to see a pullback and a retest. And if we get that pullback, even if the market's pulling back, and I decide, listen, I'm going to add more here. However, I need to use a stop right below that support level. And we're going to use the daily charts to time the trade. If it looks weak, if we have Stokes going in the wrong direction, price continues to move lower, we're not going to make the trade because I'll be concerned about that support level not holding in advance. I'm not going to pull the trigger on the trade if the daily chart is not looking good. If it looks weak, we're going to avoid the trade. We'll look towards the end of May to see whether or not, if we're trading intra-month down below the support level, do we rally back? Do we recapture that support level? If we don't, well, this breakout, assuming that we do close above resistance, will have failed. It will have been a bear trap or bull trap. And we would want to look to probably stop out of the trade and move to the sidelines. So it's a fluid trade, as all trades are. It's a valid point. So yes, I am concerned about the gold miners selling off with the rest of the market. RL, hey RL, FOMC minutes and conference. I don't know how much it's going to really matter, right? They've said that. Norris, I'll go over. So I went over both of your symbols. Enjoy your dinner, pal. I don't know how much the FOMC minutes are going to matter next week. Okay. Chuck, is the deflationary theory still a concern with gold and the miners? Yes, it is. Short term, yes. But longer term, I think that it's a micro concern, right? But the macro story hasn't changed any. The macro story is that the Federal Reserve is printing $1 trillion a month that we don't have. And even if the economy opens up tomorrow, they're still going to be pumping money into the economy. And they're going to continue doing it at least through the election, because the minute they take their foot off the gas, the stock market is going to implode. We know that. The last time they tried to take their foot off the gas and they tried to roll off their balance sheet, what happened? We went right down. So it's only going to get worse. Danny, thanks for, and I completely understand. I think gold will go ballistic after the next. And be careful of this North Korean story that's out there right now. That's a vacuum. And watch Iran as well. We're saber-rattling over in the Middle East, trying to get the price of oil up. And that could shoot gold up higher. So be careful. These geopolitical events could spark a big rally in gold at any moment. Let's move on. POT. You know, first I want to take a look at the futures because I'm so curious with what's going on right now. Then we'll go back to the requests. Wow. Now we're down nearly a half percentage point. Very interesting. Very interesting. Gold. Gold continues to lighten up here a little bit. Okay. Check out the dollar. And you're seeing the dollar gold correlation come back into, or inverse correlation, creep back a little bit. All right, we're off the lows on the US dollar. All right, let's go to POT. Pot Networks, never heard of them. Monthly chart, not a lot of data here. Weekly chart. You have a lot of resistance above here at this blue line at around, what is this, a penny stock? This is PTON. This is not the right symbol. POT is the old symbol for potash, which is no longer in business. They were bought out. You can make sure I wrote down the right. I have too many comments to go find this. May I ask you to re-enter that symbol? Oh, pot stocks. That's what I wrote down. Okay, got you. All right, forget it. Forget it. I just wrote down POT. All right, so let's go to CGC. All these comments coming through, it gets confusing. Okay, Canopy growth. I would imagine in this environment, they're doing pretty good. And they are. All right, so we've reversed off of key support. Looking good. It looks as though these Stokes are probably going to try to put in a higher low. So this, let's change this. Let's use the lows of the month. Let's get rid of this. $12.76 per share. New support. Weekly view. I don't like it. And the reason why I don't like it is that these candlesticks, on top of the candlesticks, if you're not familiar with candlestick charting, these are called wicks, shadows, whatever you want to call them. Call them cupcakes or hot dogs. It doesn't matter. What they imply is that you have sellers above. You have investors, traders that are selling strength. Now, we did manage to hold the support level last week, but we have a new resistance level right here. God damn, it's not working tonight. Right here at $16.30 per share. Now, we closed out at $15.59. So there's not much reward to the upside. Not a ton of risk as long as you're using a stop loss order. But, you know, the markets are sending us a signal right now that you have sellers that are selling this strength. So I'd be very, very careful. Daily chart. Now, the daily chart looks a little bit more optimistic, to be honest with you. We had an outside reversal day, a bullish engulfing day on Friday. We closed above the 50-day moving average for the first time since February the 20th. Stokes are looking very good. They're hooking up. We're holding well above the neutral level. Let's use raindrop chart for a moment. All right, so the reason why I wanted to use this chart here, and it's very bullish, is because you could see on the top of the candlestick to the right that pregnant bulge And what that implies, this is a mixture of candlestick charting and VWAP, volume weighted moving average. And what that implies is that as we neared the close, you saw a lot of volume move in, and you had a lot of buyers net buying. And you could see, sure enough, a beautiful final 45 minutes of trade. And we rallied right up into resistance. So the chart on a very short-term basis is looking very good. It's the weekly chart that has me a bit concerned. I mean, if you're dead set on placing the trade, I would stay very, very small. Use a stop loss right below the lows of Friday, and then add on a rally and a close above $16.15 per share. Because from there, we could rally. Let's bring up regular candlesticks here. Let's overlay weekly resistance. It's not showing us much here. Let's see if we get monthly. No, nothing. Here, let's do this. Go back to weekly, take off daily. There we go. All right, so this is kind of deceiving. There's more resistance than what meets the eye here. Here's resistance level number 1, right around 1865. If we get through there, $21.44. So you want to definitely just scale in here. But the chart is shaping up on a daily basis. Just use a stop loss right below Friday's lows or Thursday's lows if you want to give a little bit more room. So it's looking interesting, but don't forget, don't get lured into a false sense of security, because I'll keep reminding you that these shares every single week for the past several, they're closing off the highs of the week and not necessarily what you want to see. So just be careful. TLRL. ROY. Tilray. Okay. Let's go to a monthly. Hey, folks, just joining. Can I ask you to hit that like button, please? Helps me with the YouTube algorithm. Thank you very much. And thanks for joining, new folks that just joined in. Hey, Pat. All right. Monthly chart. Not much data here. An inside month thus far. Monthly chart is worthless. Weekly chart. You can see by this volume bar, this is a battleground trading range. All right, let's get rid of that. We broke out last week. But we have resistance immediately above at around just shy of $11. Where do we close? $8. It's good percentage terms to the upside. We have RSI, which is rising. It's putting in higher lows and higher highs. It's good to see. Daily chart. On a daily basis, we're going to have resistance at 8, $8.07. I'm sorry, that's where we closed. $8.52 per share. So beware. Let's see how we close. I want to bring up the raindrops. And for those interested in TrendSpider, there's a link below. Use that link. Use discount code CT25Z. Get 25% off. All right, nice close on Friday. Again, going back to this pregnant candlestick, you want to see, this is exactly what you want to see. You want to see volume. You want to see buyers move in the final few minutes of trade. And that's exactly what you had. This is a 15-minute chart, final 15 minutes. Nice trade. So I think we could move up higher here. But just beware, you have a resistance level right around $8.59. So just, you know, if you want to add now, fine, stay small, add more on a breakout, and you have resistance just at about $11 per share on a weekly basis. VTIQ. Let's go to monthly chart. Another one, not much data. Very, very overbought on a monthly basis. Relative to the third standard deviation Bollinger Band, very, very overbought. Weekly chart. We closed off the highs of the week last week. But we did manage to close above the prior week's highs. So if you're in this stock, $12.68, a critical support level. Where do we close? Only 2 cents above it. And you can see we rallied on Friday up into that third standard deviation Bollinger Band, and they just sold it off, as they should. You're not supposed to be there. So I'm not sure what is driving the stock. It looks like they may have a large number of shorts in the name getting squeezed. Good breakout on Friday, actually Thursday. You may get a pullback and a retest of this breakout point. That would be an attractive entry point at around $12 to $12.15 per share. And then add more on a continuation move higher back and above $12.70. You want to close back above $12.70 by Friday next week. Stalling out here on an intraday basis. Let's bring up the raindrop charts. Let's stay consistent. Go with the final 15 minutes. Saw some selling into the close. Very speculative, very volatile stock. I think that you're probably going to get a pullback here. And I would look to get into this stock, if you're dead set on doing it, right at around $12 a share. 12.10, 12.11, 12.13. Doesn't have to be to the penny, but around that level, that retest of support. And if we hold it, consolidate, then you'll probably see a continuation move higher. What you want is a validation. Traders, they want to see a validation that this breakout is for real. So look for a retest of support. Next chart up. DKNG. Hopefully I wrote that down right. Draftkings. Huge month. Huge. Weekly view. Powerful stock. What I would do here, and I haven't taken a look at the daily chart yet, but what I would do here is I would set an alert, keep it active for the week. Okay, good. Daily chart. You can see we were trading above it. They couldn't hold it. So what could happen here is that we pull back, just like with the other stock, VTIQ. We pull back and we do a retest of support. That would be a great entry point. You scratch the itch down here at around 1712, 1715, whatever. As long as it closes above this current support level, it was resistance. Technicians like me, we want to see that retested. And if we rally and manage to recapture this support level here, or resistance at current, then you want to add to the trade because it's a strong stock. So that would be the play there. So I would set an alert here because I'm interested in it. Okay. We'll keep it active for the week. And there you have it. Good to go. Actually, that's the wrong support level. Oh, they won't let me do it. So we'll do this. Boom. Right there. Okay. So we're good to go. We don't have to stare at our screens. Let the computer do the work for us. And there we go. We got a couple of minutes left. Anybody have anything else? Let's take a look at some comments here. And then I want to scroll back through. Okay, VTIQ. We already went over VTIQ. British Knights. All right. Oh, I had to go over for Eric. I would never forget about you, Eric. Ever. HMMJ. This is not going to come up. It's going to show me Toronto. Boom. That's what we want. Let's go monthly first. Very nice monthly candlestick so far. A bullish key reversal bar on the month. Very nice. Last month, you saw a lot of buying. Rallying the shares off the lows. This month, good month. Weekly view. All right, so this is where it gets a little bit more complicated, but there's always a solution. So this is our primary resistance level. That's the Pimp Mac Daddy. But we have a secondary resistance level, which we've already overcome and broken through. I would use last week's lows as a support level. Actually, the week prior's lows. Sorry about that. We have resistance here at around $7 per share. But this is going to come first, this primary resistance level. Volume is dropping off. That's not good. Not when you're nearing stiff resistance. Remember, you're in a long-term downtrend here, not easily overcome. So what you're going to need, because you have a lot of buyers up here that bought back here, they made a lot of money up here, never sold, they want their money back. So they're not looking to make a profit, they just want their money back. So when you rally up into those pack of sellers, you need volume. You have to have it. So while it's a good-looking stock on a monthly basis, even on a weekly basis, you have a lot of obstacles to overcome here. Daily chart. It looks good. I think that we'll probably put in new weekly highs as volume is horrible. We'll probably put in new weekly high or daily highs, weekly highs, I'm sorry, and daily highs. You know what? Forget that. Let's do this. And we broke out, excuse me, on Friday. So the play here, I would not buy it on a continuation rally out of the gates because you have resistance immediately above on a weekly basis. Remember that. So what I'd like to see is a pullback and a retest of support right here. And that's at around $6.45 per share. We closed, that's not that far out. That can't be right. Let's use $6.34 per share. We pull back a little bit. Enter there. Put a stop loss right below the support level. Because if we close out today on Monday, Tuesday, back down below the support level, that's a bull trap, a breakout point failure, and you don't want to be a part of it. Let's take a quick look at a 2-hour chart. See how we closed out. Very nice. Very, very nice. I think we're going to get a continuation move higher here. But again, what's haunting, and I'll always go back to this because we do multi-time frame analysis, right? So we want to respect this is the wrong chart list. we want to respect this resistance level, or these two resistance levels above. We can't forget about them, right? They're there. They're like concrete walls that they're going to need to be overcome. And we don't have the volume at current to be able to do that. So be very, very careful. I think that we're going to go higher here. The question is, do we get through resistance? That's the big 800-pound gorilla in the room. I mean, if we rally and close back above $6.80 thereabouts, I think it's a buy all day long. Actually, $7 a share. That's better because it puts you above those sellers back here. $7 a share, very, very attractive entry point for HMMJ on the Toronto Exchange. And smash the like button, please. Thank you very much. Yes. Oh, somebody just brought up uranium. Yeah, and it's one of my favorite charts moving forward. This is not uranium I'm bringing up. Somebody just popped this in there as a symbol. I'm not familiar with it. So, uranium is in a stealth rally. This is the URA, the Globix Uranium ETF. And there's a stock I'm doing some analysis on. I'm not sure whether or not we're going to pull the trigger just yet, but I'll be sharing it tomorrow on Market Wrap. Why is this not here? Oh, it's the wrong chart. List. But I'm not ready to talk about it just yet. So here's uranium on a monthly basis. And you can see that we're hockey sticking up on RSI. We're beginning to break out of a tight trading range on Stokes. Look at this price action. This is beautiful. Now, granted, we do have resistance above, but this is looking really, really pretty. Here's a weekly chart. Now, we've come a long, long way. We have resistance at the 50-period moving average. It's where we were stopped last week. Volume dropped off last week a little bit. Do I have a daily chart here? No. Let's make a new one. Beautiful chart. But, man, being aggressively accumulated. So I don't know whether or not I want to chase this thing. Let's go to TrendSpider really quick. Formulate a game plan. Yeah, we're right at resistance. I looked at this not too long ago. I just reminded myself. So what I want to see here, I didn't even think to set an alert here. It was so far away at the time. What I want to see is a breakout on a daily basis. Keep it active for a while. Good. Let's throw some actually, that was a daily, a weekly chart I was looking at, not a daily chart. But there's the alert right there. I'll tell you, I would love nothing more. And I think it's entirely possible to get a pullback and a retest of support. So again, we're going to keep this active the next 5 days. And it triggered on the wrong line. That's my fault. I can't live with the spelling errors. Sorry. That's my OCD. All right. So there we go. We're good to go. Let the computer do the work for us. And with that, folks, you know what? I'm going to circle back. We're going to take a look at the futures, and then I'm going to sign off. Here's the dollar giving up a little bit of ground it took back. These are all 4-hour charts. And folks, if I could ask you to hit that like button, please. Thank you very much. Let's go to the S&Ps. They continue to weaken up here. $30-minute chart. We're coming back a little bit. Gold. Gold's coming back as well. NASDAQ. NASDAQ coming back. Nat gas. Giving up a little bit of those gains. Silver. Still looking good. It's actually gained ground. Up a 0.5 percentage point. Frank, you're a gentleman. Thanks as always, my friend. Thanks for being here. Stay safe. Everybody, please stay safe, please. Thanks, Trent. Thanks for your help. It's a lot of likes. Yes, thank you very much, everybody, for those likes. I appreciate it. It really helps out with the YouTube algorithm, the engagement. Trisha. Hey, Trisha. CCJ. All right, I'm going to leave it off with you. Mr. G, you're very welcome. CCJ, I'm sorry, CCJ. Ooh. I'm not a good poker player. If I get a good hand, ooh. All right. Beautiful breakout here. Beautiful. What industry is this, Trisha? Sam, my analysis on Microsoft is that it flashed a bullish key reversal bar last week on Friday. There's a good possibility that on that reversal bar, it'll rally up higher into earnings. The question is, how does it perform after earnings? And that's the $600,000 question. So it should go up. If it doesn't go up tomorrow and you don't get a follow through after Friday's very bullish reversal day, there's something wrong. Sounds good, Pat. I'll talk to you tomorrow morning. I'll text you. Yep. Okay. So Trisha, what is the industry here? John, have a great night, my friend. You too stay safe as well. Your family as well. All right. So beautiful month so far on Cameco. I mean, incredible month. So the question then becomes, oh, uranium. Oh, okay. No wonder why. Okay. Thank you. The question then becomes, where do we have resistance? And we're right there on a monthly basis. Where do we close? We closed right at resistance. You know, I'm showing 1017 as resistance. You know, we're right there. In fact, I'm going to move it up. I'm going to use 1023 as resistance. So that way, if it breaks through, okay. We'll keep this active for a while. Weekly chart. All right, so weekly chart, you know, no shock. We have resistance immediately above. We knew that. Daily chart. All right, so the question then becomes, we know we have resistance above, so where would we feel comfortable on a pullback with entering the trade? So I would do this. Right here. Are they going to let me? God damn it, they don't let me do that. Okay, so J. Okay, we'll keep this active for a few days. That's where I would look to enter, right there at around, let's call it 950 per share. So, nice chart. Very nice. Tomorrow morning, no, unless the markets are really volatile. I mean, I'm not usually on Monday mornings, but Tuesdays through Thursdays I am. But Thursdays I do Thursday night stock charts live, so I usually don't go on Fridays. But again, if we have unusual market volatility, I'll be on every morning when necessary. So, but I don't have a plan right now to be on tomorrow morning, but that could change. With that, folks, I'm going to say good night to everybody. Have a great night, and thanks for being here, and stay safe, be well, and I'll talk to you throughout the week. Bye-bye.